Every day seems to bring a report of a new commercial space venture in the US or overseas. The business press is also buzzed with news about the use of SPACs, or special purpose acquisition companies, by commercial space ventures seeking a faster way to secure major capital infusions. Some are pre-revenue and yet are generating massive valuations. This has led some skeptics to fear that we might be treading into a bubble. Today's two speakers are a couple of gentlemen who have been in the trenches and doing the hard work of blocking and tackling as they built their respective businesses. One is a company, Voyager, investing in building a vertically integrated commercial ecosystem, and the other a business, Nanoracks, that has been methodically building its customer base for over a decade via the ISS as well as other platforms. Our first guest, Dylan Taylor, serves as chairman and CEO of Voyager Space Holdings, a multinational space holding firm that acquires and integrates leading space exploration enterprises globally. Dylan has been cited by Harvard University, Space News, the BBC, CNN, PitchBook, CNBC, and others as having played a seminal role in the growth of the private space industry. As an early-stage investor in more than 50 emerging ventures, Dylan is widely considered the most active private space investor in the world. Dylan's technical background, global business experience, and unbridled passion for space make him a unique figure within the industry. Our second guest, Jeff Manber, has served as CEO of Nanoracks from 2009 onwards, and more recently has taken the role of chairman of the Exo Markets board. Jeffrey, along with co-founder Mike Johnson, has steered the growth of Nanoracks from a garage space in Webster, Texas, to where Nanoracks is today, a pioneer and now leader in the commercial market for low Earth orbit utilization. For the future, Jeffrey is increasingly focused on bringing Nanoracks hardware and commercial services to more in-space platforms. To both Dylan and Jeffrey, as two business persons active in the field, our audience will be interested in knowing your thoughts on the state of the industry. For example, is there too much froth and bubbling, or is the current set of dynamics healthy and a harbinger of good times ahead? What will separate the wannabes from the long-term success stories? And what role should the government continue to play in ensuring a healthy and vibrant commercial U.S. space domain in the decades to come? In my role as moderator, I'll start off the conversation, first with Jeffrey and then Dylan. While I'll ask questions individually, by all means, let's make it a dialogue and feel free to chime in as you deem fit. During the discussion, I encourage the audience to send in your questions via the chat feature, and I'll do my best to have as many of them answered by our speakers as possible. So with that, I'll start with the questions. For Jeffrey, I'd like to ask a bit about Nanoracks. What were your goals when you originally founded the company, and how has that evolved over time?
Hey, good afternoon, Rob. Thank you. And let me, before I begin, just say, thanks to Sally and Courtney and Tori and Annette for inviting myself and Dylan to speak here this afternoon. It's a sophisticated crowd. I know many of you I see, and it's great to at least see the names and hope everybody's doing well. It's hard. And let me say one other comment, if I may. It took about 14 seconds before we first heard SPAC. Okay, I was wondering if we would discuss it this afternoon, and boy, froth and SPAC came out pretty quickly. It's hard for younger people in my office to understand how far we've come in the community in the decade. Nanoracks was the first company in the world to own and operate and market its own hardware on the International Space Station. And, Rob, you said something else. You used the word revenue. I believe since the beginning that revenue from customers is golden. And that Nanoracks today, we have customers in over 30 countries. They range from sophisticated space agencies, government agencies, to biopharmaceutical companies. And why is that important? Because as we move into the next era, where the public-private partnerships are going to have to be more robust, we're going to have budget problems, the debt's going to rear its ugly head over time. It's important to show that a company understands how you widen the net and you have customers from all over who are contributing to the space services and the hardware. So to answer your question, when I set out to do Nanoracks, it was to truly introduce a company that would help others we knew were coming to implement their space programs and visions. And I think we've done remarkably well with that.
Thank you. So the next question will be for Dylan. I'd like to ask you, Dylan, what would you say is Voyager Holdings' primary objective, and how does that drive the logic and strategies of your investments?
Yeah, well, thank you, Robin. Again, just to echo Jeff's comments. It's great to be with all of you here today. And, Washington's obviously, if not the most important epicenter for the space industry, certainly on the very, very short list. So real honor and privilege to be here. So Voyager, really the fundamental premise behind Voyager, Rob, is that we're trying to solve what we perceive to be a specific problem in the industry. And that is, you have this wonderful dynamic between the larger, most capable space companies in the industry that are tried and true and defined by really complex, highly capable missions that they're capable of delivering. And then you have this wonderful new space phenomenon as defined by Nanoracks and SpaceX and others, where you have high levels of innovation, high levels of entrepreneurial spirit, high levels of fail fast and fail in quotes, of course. And it's wonderful. And I think it's disruptive in the best sense of that word. However, I think where the industry is a bit blocked or a bit stuck is that new space phenomenon isn't scaling particularly well. And by scaling, what I mean is getting those companies to fly in formation and assemble capability so that they can compete for the largest, most lucrative projects in the industry. And I think reflecting on that, I think there's a couple of reasons for that. In most industries, what you would see is the typical consolidators would either be a strategic buyer, which would be defined by, let's say, an innovative version of the big company paradigm. The famous example would be Apple consolidating share, competing with Microsoft as an example. And in space, that's not particularly easy to do for a number of reasons, which I can go into in detail. But the second typical aggregation platform would be a private equity type roll-up. I think everyone's heard that that term of phrase. But the challenge with a roll-up strategy purely in the space industry is what we're really attempting to do is more of an operating challenge. It's taking capability A and a complementary capability B and assembling that to unlock a part of the market exemplified by capability C. And if you look at typical private equity platforms, they're not really in the business of operating. They're more in the business of financial engineering, if I can use that term. So long story short, Voyager thinks the opportunity is to take the new space phenomenon, harness it in a way, professionalize it, make it a safe choice, if you will, and assemble capability so that over time you have a highly capable platform that can compete with the larger firms or partner with the larger firms, frankly, because the ecosystem supports all kinds of strategic partnerships, but fundamentally have a capability first platform that's highly innovative. So that's really the problem we're looking to solve. And Nanoracks is probably the best example of a company not only remaining innovative and remaining agile, but also doing really significant things in space.
Thank you. Jeff, that's a good segue into the next question, really, which is, why did Nanoracks decide to accept this infusion of capital from Voyager now? What will this investment allow Nanoracks to do in the future?
Yeah, it's an important question, not just for Nanoracks or Voyager, but for a lot of the folks listening in this afternoon. We set out at Nanoracks, we raised capital infrequently. The Series A was 6-7 years ago. We've grown to where we are today on revenue, which is a little unusual in our industry. And we set out to do a Series B at the start of the summer, really to implement some larger contracts we've been getting. And we needed the capital to implement. And, I've spent a lot of my career saying I want to make space another place to do business, and space should not be different from any other market. Where the more I spoke to capital sources, and we were just entering into the period of excitement, or as you said, Rob, froth, and we can discuss that in a little bit. But people wanted to give us capital. But the more I talked to the capital sources, and the more I thought about where the market's going, it's hard to see, as Dylan says, the scalability. And the scalability one's going to need in a growing market. There's a paradox. if the market was staying sort of going along and things were going okay, the Nanoracks of the world could stay independent, could grow the way we're growing, bring in some capital. But I think we're on the on the cusp of an entirely new era. And with so many companies going public, with so many entrepreneurial space companies having access to hundreds of millions of dollars, where does that leave a Nanoracks? Okay, so how do we say to our friends in the public sector, we want to do a robust public-private partnership, but I can tap, X amount. And so the more I looked around and Dylan and I began talking, I realized that Dylan and Voyager, we have shared vision that this is a long journey. It's not a quarterly journey, that the journey is important. And how do you tap and keep the entrepreneurial spirit going even as you scale up? So the two answers to your question are, we found an organization of which we share the vision and that this is not a short-term exercise. And at the same time, I realized that in the market today, with so many companies going public and capital being readily available, if I want to remain involved in space stations and I want to be part of private space stations and free flyers and build up internationally, you need a sort of access to capital that I think we'll do together with Voyager. So that's the sort of long answer to the question.
Thank you. So for Dylan, leading from what Jeffrey just said, what's the nature and scope of the particular space ecosystem that Voyager is hoping to structure, and what does it look like in the next 5, maybe 10 years?
That's a great question. We probably could use all 45 remaining minutes on that, Rob. I mean, there are a couple of things we're focused on the near term. One is we're big believers that if the last 10 years was defined by building access to space, as Jeffrey likes to say, the next 10 years is really about destinations. It's really about where you're going to go. So we're big believers in the private space station, free flyer outpost vision for the industry. We're also big believers in the LEO economy. That would include not only ultimately getting the mega constellations launched and operating, but also a very healthy orbital servicing economy. We share that vision as well. And then further afield, deeper into space, we think a cislunar economy is something that's interesting and should be focused on. It's not just arriving at the moon or building the railroad to the moon and back, but there's all kinds of capabilities, infrastructure related to that long-term vision, including, position, navigation, and timing, energy generation, communication protocol, a number of infrastructure things that we think deep space is going to need in order to fulfill the vision for cislunar and for ultimately the lunar economy. So those are some of the things we're focused on. We've made now 4 acquisitions. We have 2 that we should announce here in the next few weeks or so, which I wish I could say more about, but generally speaking, those are the roadmap or areas that we're focused on.
If I could just ask a follow-up question to that, and this could be for either of our guests, feel free to chime in. The lunar economy is obviously something that's very interesting and been sort of talked about a lot lately. What would you say are the driver or drivers behind that? Is it civilian, commercial, military, science, all of the above?
I think all of the above. I mean, some of the best business plans, I think, are national security concern related. As you probably know, Rob, rare earth minerals are in short supply. They're generally speaking primarily controlled by China here on Earth. There's reason to believe that there are rare earth minerals in abundance on the moon. So that's one business plan as an example. And I think, certainly planting flags, that's a big driver. China has recently been there. Israel had an attempt last year, as you know, that was very close to being successful. And we have some commercial ventures. And of course, Artemis, notwithstanding the fact that timing is likely to be pushed out, I think the ambition of landing the first woman on the moon is noble. And I think the administration shares that view as well. At least I hope they do. So I think there's a lot of confluence of opportunities there that's going to drive dollars towards moon-based commerce.
Thank you. Yeah, that's an excellent lead into my question that I had for Jeffrey, which is, what does the government do well, and what changes would you like to see from the government to help expand commercial business? And we can add this to, commercial business augmenting science or military or anything like that. And this could be a particularly relevant question with Artemis and also today's news of Bill Nelson being tapped as potentially the new NASA administrator.
Yeah, for those who know me, the question of what does the government do well is a loaded and dangerous question. I mean, what government does well, in the space exploration, what the government does well is articulates a vision, and articulates, expresses a desire that we can all get around as to why exploration of frontiers are very important. I'll step back for a moment and say, as some of you may know, we've opened an office in Abu Dhabi in the UAE. We've announced a very exciting program doing space farming, ag tech innovation using the harsh environment of space. And I'm struck so much by the way the UAE is approaching space. They call it a 100-year venture, and they say within 100 years, we're going to be on Mars. And when you ask them, why are you involved in space? Why did you choose space? They're very down to earth. They say, look, it's something that excites the next generation. It's something that gets our younger people not to want to emigrate, not to get off of Minecraft and all the other video games. This is something that everybody feels good about. So they have very practical reasons, which in some ways have very little to do with space itself. For the United States, of course, we have strategic reasons as well. And so there's an extra layer of complexity there. But to focus exactly on what government does well, government has to be the one that brings everybody to the table. Government has to be a customer where the private sector is unable to be a provider of funds and capital because it's too early stage. We've done this before. We've done it with radio. We've done it with aviation. We've done it with the internet. It's that baton switching over that's so difficult. And what the government should do is continue to invest where private sector people fear to invest, and then at the right time, pass it along to the private sector and remain fully as a customer. And one of the points, if I may add one other thing, I gave a talk in Tokyo to the Japanese Space Agency, and I did some research looking at how we did aviation. I found out that, a lot of the early pioneers, Mr. Boeing, Mr. Northrop, Mr. Grumman, and yes, they were all men, they could not have gotten anywhere without the government as a customer. Congress gave them monopolies on different air routes. And I found out in doing my research that United Airlines used to be part of Boeing, and it was broken up by Congress. It was fascinating. And then I looked at the Japanese and found out there was no history, zero history of the Japanese government promoting and helping new markets. And when I gave the presentation in Tokyo, they were stunned, the JAXA people. They were stunned that what we're doing in space, the relationships between the government and industry, are not new from an American perspective. It's taken longer than any other industry, and why that is a subject of another discussion. But whether radio or television or aviation or railroads, internet, we've been here before. And so as Americans, we know how to create new markets and turn them over to the private sector at the right time. So the government should be there where the private sector cannot be.
Thank you. If I could just ask a follow-up question on that, how would you suggest the U.S. engage international cooperation in space ventures while still protecting the American intellectual property?
And I realized in giving you a long answer, Rob, that I didn't answer about Bill Nelson. There is something I do want to say on that. I mean, it's I haven't seen that it's confirmed or anything. You know, I hear like everybody, the rumors coming out. I will say one thing, what I've learned in my time in Washington. When you have a nominee who really is wanted by the President of the United States, that is not a bad thing. Okay, so I've had people say Bill Nelson's good, Bill Nelson's this, but all I know is from what I read that the President of the United States is pushing to have Bill Nelson be the head of NASA. And I think that will speak very well for NASA's role at the table, especially if there is not a space council, especially with the other major social and national challenges we face. It would be very encouraging to have, you know, to know that if it is Bill Nelson, it was done by the president. You know, as some of the folks here this afternoon know, I've worked pretty hard on international in my career. Carried over the first contract between NASA and the Soviet Union. And when I speak publicly at universities, the younger people always raise their hand and say, why didn't you email it? And then I have to explain that there was no computers then, there was no email. So you know, I've spent a long time trying to involve NASA and the United States and the space community to work with folks that we may not be our favorite friends. More recently at Nanoracks, I was very privileged to be given the opportunity first by the Obama folks to work with Beijing Institute of Technology on a DNA genetic experiment that was utterly fascinating. And then it was, by the time of launch, it was in the Trump administration and they endorsed it as well. So it took really 2 administrations to give the blessing. It is very, very clear that we need to operate internationally, but of course we need to protect IP. In the project with Nanoracks, all of the hardware that was necessary for our Chinese researchers was procured in this country when they came. That we separated them in terms of IT, were separated from the space station IT system. We worked very carefully to address concerns that folks in Congress had, particularly that there was no threat to the space station operating system. Look, you just have to negotiate hard. You have to make it clear from the beginning, and we can't be fearful. A lot of nations want to work with us in space. And I think if there's one area where you will see compromise, where you will see genuine negotiations take place, it would be if this administration decides in some manner to sit down with China, to intensify discussions with India and others to have more robust international presence, protect the IP, negotiate well, and I think you'll find that in space exploration, other nations are indeed willing to negotiate more than they would for an automotive deal or computing manufacturing deal. There's a lot of symbolism to be associated with NASA in the United States, and we should take advantage of that.
Thank you. So for Dylan, a bit of a different question here. One of the challenges or barriers to enter space is the tremendous risks that are involved. I was curious as to your opinion as to how risk management plays a role in your business, both from a technical risk management perspective, i.e., you know, protecting against the rocket blowing up, to financial risk management, so like the investment doesn't work out. What are your thoughts on that?
Yeah, it's a thoughtful question. So there are 2 different ways to look at that. One is as an investor and one is as an operator. I think investor viewpoint, typically the way to manage the risk is to diversify. So what you're trying to do as an investor, it's very difficult oftentimes to pick individual winners and losers or make individual investment decisions that you have a high degree of certainty on that particular decision. However, if you make enough of them and you're making them within an ecosystem that is generally in a bull market or trending upward, typically your risk is kind of washed through that system, and you end up, you know, generating alpha, what they call alpha, which is outperforming the market in some significant way. And if you can't outperform the market, then why invest, right? Just hire a professional manager who's going to invest and presumably at least get you market returns. So the short answer on the investor side is diversification. The longer answer on the investor side is it's all about who you're doing business with. And I think fundamentally, when you're talking about operating companies, it's 99.9% the team. I talk to a lot of early stage founders. I really enjoy mentoring founders and learning about business plans, especially students right out of MIT or other technical colleges. And oftentimes they'll lean into whatever their idea happens to be. And one of the harsh truths is the idea doesn't really matter. The number of good ideas I hear in a given week are more than I can count on two hands. Everyone has good ideas. Everyone has good IP. The issue is, can you execute? And furthermore, I don't think there's ever been a business plan that I'm aware of that's ever been written that was executed as written. There's always a pivot. There's always a pothole. There's always some unexpected event in the future you can't plan for. And that, fundamentally you want a team that can, not only be resilient, but can make good decisions in the moment based upon new information. So that's really the investor look. Similar on the operator side, I think the way you diversify risk is you diversify by client base. This is one area I think Jeff has been brilliant at on Nanoracks. It's not only DoD versus civil space or geographic diversification, but even within civil space, I think at last count, Nanoracks was doing business with something like 30 space agencies around the world or 30 entities around the world. So I think diversity of geography and client base, I think, mitigates a lot of the risk as well. And then just maybe the final point I would make is, and I think this is the seed of your question, thoughtful risk management, right? And I think the way I think about risk management is never put the enterprise at risk. It's okay to, skin your knee. It's okay to make an incremental decision that's flawed. That's how you learn. But you never want to put your enterprise at risk. Even if the reward is an outsized reward, it's just not worth betting the farm for. So that would be another philosophical point I would make.
May I add one thing on that, Rob, to what Dylan was saying?
My next question is about risk management from your perspective, Jeffrey. So go right ahead.
Well, that's what I was going to address. Dylan was just talking about how you never, I'd put it more colloquially than Dylan did, you never bet the farm. And we had a case early on at Nanoracks where, how do I say this politely? Some folks we were associated with were upset because we were taking insurance. And I know that that really hurts you, Rob. I know that really hurts you. And they looked at what we had spent that previous year on risk mitigation. And they were like, you would have, at that point, this was early in our existence, they said you would have like doubled your revenue almost if you didn't take insurance. And I was dumbfounded, but it was a West Coast view. And they were like, just, go over the cliff and see what happens. And so one of the things I'm most proud of is that, Dylan was talking about kindly about how at Nanoracks we have diversification of revenue by sector, by geography, but we're also prudent people, even in the early days. And that's how you have an entrepreneurial venture last a decade, and especially in this business, is by being prudent. And one of the things I'll say is, we work with Willis, we work with you, and the level of sophistication on the tools available to smaller companies now, I think, and you can speak to this better than I can, but I believe that what's available today is much better than what was available earlier. When we first started out, people were like, Jeff, we really like you. We'll do you a favor here, because we know you. We'll underwrite this CubeSat for a customer. Well, and slowly we have grown, and the market, the CubeSat market and the launch vehicle market has grown. And today it's pretty sophisticated. There's a lot more ways you can package, a lot more opportunities. When we took the Bishop Airlock up, we were offered myriad different opportunities, not just the launch, the pre-launch, how it works operationally once it's up there, the attachment. There were all sorts of issues. And so we had a degree of sophistication we could not have earlier. And looking forward, that bodes well as NASA begins to question, can we trust the private sector to be operators of space stations, free flyers? There's a lot more tools available to us now in the private sector than we had half a decade ago.
Thank you, Jeff. Yeah, I just thank you for the kind words. But I would say on behalf of the insurance community that if you are working in space insurance, you need to be able to adapt, and you're working really with the cutting edge of technology. And so if you don't, you're just not going to have a business. So that's why the insurance community is happy to help companies like Nanoracks out with your evolving needs. So if I could maybe pivot back to something that Dylan said, which was interesting. I mean, you mentioned the lunar economy, and then you also mentioned rare earth metals. And that sort of segues a little bit into a question about something as maybe as far looking as asteroid mining. So what would you see if there's a legitimate market there in, not in the next 100 years, but in the next decade or two? And if there is, what will be the role of commercial space there? Is it comm networks, power depot, transportation, et cetera? How do you see that panning out and looking like?
Is that to me, Rob? Yes.
For Dylan, yes.
Yeah, okay, great. Yeah, so asteroid mining I'm a bit skeptical on, but if you consider the moon an asteroid, then you have my attention. I think where we're headed is really so-called ISRU, or in situ resource utilization. One of the companies Voyager owns is Pioneer, Bob Zubrin's company, which is really Robert calls it the Bell Labs of the space industry, and I think that's a fair depiction. 18 PhDs doing original university level research on commercial space technologies. But one of the core IP patents that they developed is really the core IP to extract oxygen from moon regolith. And I'm a believer in that. I think when we go back to the moon, it can't be stay for 36 hours. It has to be, how do we stay for a couple of weeks? How do we use the resources on the moon to start building infrastructure, whether it's breathable oxygen or oxygen that can be used as propellant? Those are the kinds of models that I think are most important. And for younger folks in the industry, these things are obvious, right? You don't go camping and take your entire house with you. You take a water filter, you take an axe, you take tools that allow you to use the resources in that environment. And so I think that's the way I would think about it. And I think it's much, much, much more likely that those resources are commercialized on the moon first before we're actually prospecting, capturing, and mining asteroids. I think that's many, many, many years in the future, personally.
Thank you. So I just have one more question for Jeffrey, and then we'll probably switch over to audience questions because we have a few that are pretty good. So for Jeffrey, my question is about the ISS, right? It's been up there for a while. What do you see as the next step once the ISS is decommissioned? And you can answer this question both from the perspective of Nanoracks and space science in general.
Yeah, thanks, Rob. And let me say, if I may gently, that your question is phrased incorrectly. I mean, the question, of course, you know what I mean, you'll see, but you say, what is the role of next steps once the ISS is decommissioned? Well, isn't that what we do so well in our space program? We wait for the crisis and then we ask the question. So my first answer to you, Rob, is what should we be doing today so that there is no space station gap? And how do we make sure that there is that by the day that comes when the ISS is decommissioned, boy, we got a plan. We got more than a plan. We have multiple free flyers in different orbits that assure not only continuation of the research, but the robustness of American industry, leadership of America in low Earth orbit and beyond. There's a whole bunch of reasons to make sure we grow from the ISS while the ISS is there. And just before the pandemic, I had a chance to speak with Senator Cruz one-on-one. And first I thanked him. I try and be polite, and I thanked him for his support of the ISS. And then I said, but sir, it's not up to you how long the ISS stays in orbit. And he kind of looked at me a little bit. And I said, because it's an engineering platform. You have the political and the funding, and you have the question, though, it's mechanical. How long does it last? And you know, as many of you know, I lived through the end of the Mir space station, and more and more money had to be spent on keeping the Russian space station in orbit. And at what point do you do the analysis and say this is no longer worth it? You know, and astronauts don't want to spend their time as repair people. So my way to answer you, Rob, is to say that today is the time to begin to look at how you have the private sector working with NASA, working with other agencies, develop the expertise on free flyers. And now I'm going to say something totally from a Nanoracks perspective, and then I'll say something, if I may, from more of an industry. From a Nanoracks perspective, the hardware is less of a challenge than the challenge we have confronted for a decade, building up that utilization so that NASA is not the only one footing the bill. And I worry at times that in the government, they say, oh, Jeff and Nanoracks, you've done a wonderful job, but I want to order another widget. And so the challenge with the free flyers and the next chapter in LEO is we want to not only maintain a robust space transportation, we want to grow it. I want to see platforms in the next 6, 7, 8 years that are in different orbits, where you develop an ecosystem, a true ecosystem, and it has the market to support that you want to be in a different orbit, or you want to be on a different type of platform than available on the International Space Station. And the hope is, with the greater sophistication we have now, I guess I'm speaking from an industry perspective, you're hopeful that the day the ISS is decommissioned, it's pretty seamless. The way it happens on the ground when a major facility, goes offline. By that point, of course, there is private sector or whatever to pick up the slack. And so it's going to be a very difficult few years. And we're going to have, and my hope is that the folks at NASA learned a lot on commercial crew. They've learned a lot from the years Nanoracks and others have been working with them on station utilization. And we'll find out. We'll find out over the next several years if we've learned enough to have it be a seamless transition to allow stations not only in LEO but beyond. And it's going to be very exciting, and I'm mildly optimistic.
Thank you. So we do have a number of audience questions, so I'm going to pivot over to there. And the first question we have is from Randy Lieberman. So Randy, if you can, go ahead and ask your question.
Yeah, thank you, gentlemen. Thank you for being here. Jeff, good to see you. My question is concerning a comment that you made early on in your front end about a concern about debt. Is that for specific companies, or are you talking literally about the national debt and how that may derail our efforts in space because of other priorities?
Yeah, hey, great pickup, Randy, and good to hear your voice. I was referring, I'm not a politician, I'm not a national spokesperson, but we have to confront the reality that we're sure spending a lot of money now, and we'll see what happens in the infrastructure bill. I'm very, very curious as to whether space will be included as part of America's infrastructure to build back better. We'll see. But my concern is that you're hearing noises from both parties and on both aisles that, we're incurring a historic debt here. And so it's going to be, I feel, more difficult to convince folks, unless it's part of infrastructure development, to make the sort of commitments to continue NASA at a greater budget level than today, to continue to see NASA get increases in the budget. It's going to be a challenge. So I was referring, I'm a student here. I'm not an expert in this. I defer to Dylan and people like that as to where we are in the marketplace. But I do have to confront the fact that what I think is important in space exploration is now tertiary at best to the needs of this country.
Thank you. Dylan, have you any comment then on that?
I think Jeff nailed it. Maybe just a couple of additional points. I mean, I think fiscally, we are going to head into an inflationary environment. You can't print $5 trillion and not create inflation. So that's a given. Typically in inflationary environments, the risk you run is the capital markets have a tendency to freeze up. If the capital markets tend to freeze up, it could have a real impact to our industry. Now, if the government is investing in infrastructure, that could also be a stimulus. So you have those two counteracting forces, of course. The other point I would make is oftentimes when resources are scarce, and I think we're going to enter a period of time where you can only raise taxes so much, I think the issue will become what projects get politicized. And typically space projects have been a little bit of a political football in the past. And I had some fear about that for the Artemis program in particular. If it seemed to be a Trump, Trump program and not a noble cause to return to the moon and have the first woman set foot on the moon. So I think there is a risk that programs like that become politicized, not for their own sake, but because they're within this larger context where resources are going to be scarcer. So I think those are the risks. I think for our industry, though, in general, I'm quite optimistic. I think infrastructure will include space in some form. I think the DoD spending is quite bipartisan as it relates to hypersonics and the rise of China and other things. So I'm quite optimistic for our industry. I'm less optimistic for the fiscal health of our country. I think Jeffrey's right. I think there are some real storm clouds on the horizon there, but I think space is relatively well insulated from that.
Thank you, gentlemen.
Thank you to both of you for that answer. The next question is from Brendan Curry.
Good afternoon, guys. As I said in my question, DC is more of a policy-focused, government-focused town. A lot of us aren't as well versed in some of the financial instruments that are utilized in the business world, and the term SPAC for some of us is still relatively new. Can you speak to that? And I've just in my travels, I've heard some skepticism about it. Just can you speak to that? Thank you very much.
So I can take this one, Rob. I just maybe beg for a little bit of an extended time here on this because I think it's a really important concept. And let me just make a few points, and I'll pause maybe a few minutes in just to make sure we're on track. But SPACs are not new. In fact, I participated in one all the way back in 2005. So SPACs have been around for a long time. The question is, why are SPACs emergent now? And there are two reasons for that. One is practical, the other is more financial. Practically speaking, we've been plugged in terms of number of companies going public for many, 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 many years. We have a little bit of a syndicate, which is the investment banking community, which likes to regulate which companies become public and which ones don't, because they obviously are big beneficiaries of that. So we have reduced the number of public companies from something like 7,000, I think, at its height, to something like 4,000 most recently. I don't know if those are the exact numbers, but the point is it's been trending dramatically downward. Whereas other countries, it's quite actually easy to go public in the UK, in Australia, in Scandinavia. So you see a lot of smallish space companies go public in those other markets. So one is practical. We had a lot of pent-up demand for capital from the public markets. You also have huge interest by the retail community in space. People know space is a cool thing. They especially some of the younger investors really want to be part of that. They want to own a piece of the rock and brag to their friends that they're an investor in some rocket company. So I think that's a phenomenon as well. The other more technical phenomenon which is driving this is interest rates have been near zero. And there is a quirk in the SPAC financing, which basically allows you to invest in a SPAC, get treasury bill returns, because the money you invest in a SPAC as a shareholder in a SPAC has to, per the law, be invested in treasury bills. But yet you have the option to either opt out of the SPAC deal once it's announced or opt in to the SPAC deal once announced. So imagine you have $1 million of cash, you're a high net worth individual, you have $1 million of cash in your Charles Schwab account, you're earning 1.7% interest. It's not even government guaranteed. And your other option is to take that $1 million, put it in a SPAC vehicle that invests in multiple SPACs. You're going to get a little bit of a higher interest rate, ironically, maybe 2%, and it's going to be guaranteed by the federal government. And oh, by the way, you have an option if that SPAC invests in something really interesting, like Lucid Motors, which goes from $10 to $30 on announcement, that you can actually outperform treasury bills. So what's happened is you've got billions and billions and billions of dollars flowing into the SPAC community because everyone's in cash, everyone meaning the people with real resources, because they're waiting for some second shoe to drop in the economy. And this is just a better cash management tool. So that's what's feeding a lot of the SPAC frenzy, is because a SPAC can literally be announced, and if it has a credible team, it can go to a BlackRock or another financial provider and raise $200 or $300 million within a handful of days. So that's really why SPACs are emergent. Those two factors are what's driving it. Now, the other thing I think a lot of people are confused on is why are the valuations so high? And I think this is a really important point. In a traditional IPO, in a traditional so-called S1 process, what you're marketing are the earnings of the company today and the earnings of the company maybe next year, and if you're really lucky, the year after that. That's what's underwritten by the investment bank. That's what you're selling to the public markets. And oh, by the way, the day or the second you hit send on your SEC filing for the S1, you're in a so-called quiet period, and you can't even talk about your company. Literally, you can't talk about it until that IPO is effective. Then you can, within certain boundaries, talk about your company. The SPAC world is the exact opposite. You're not talking, they don't even care what your earnings are today. They don't care what your earnings are next year, or maybe even the year after that. They're looking at like 2025, literally. So you're being valued off a very, very forward-leaning number. And rather than being in a quiet period, I think we've all seen the SPAC sponsors and the companies that, at least in the space community, that have announced, they're actually on CNBC the next day, talking about how they're going to do a rocket launch every day, right? Which is, at least for my money, not practical. So I think those are the differences. And you would ask yourself, rightly, especially being in DC, perhaps, where are the regulators in all this? And the philosophy behind SPACs were, because the shareholders actually approved the merger, that these shareholders were going to be very credible, very sophisticated, very knowledgeable investors. But of course, in a world where GameStop, if you've heard of that stock, is trading at, depending on the day, several $100s a share, I think presumably a lot of the SPAC shareholders aren't necessarily as sophisticated as the SEC might have predicted. And so you have this disconnect between what the market thinks these companies are worth and perhaps what they actually are worth. But those are the different dynamics driving it. I think it's a bit technical, and Rob, thanks for letting me run on here for a bit. But I think, I had a mentor one time who said, when the markets don't make sense, try to figure out what they're trying to tell you. And I think with SPACs, it's very, very much in that category. The signals are clear. You just need to kind of weed your way through the structure a little bit to see what the market is telling you.
Thank you.
Thank you, Don. The next question is from Courtney Stott. Courtney?
Yeah, thank you. Dylan, you really have answered a lot of what I was concerned about with the commercial space potential bubble, and by the way, an excellent deconstruction of the SPAC. I also want to say that this really this event, and I'm very biased, but really met expectations, because what I'm hoping the audience will take from this is that we've got two people, as Rob said, that really are in the trenches, have the scar tissue and the experience. And with all due respect to a lot of the cheerleading that I've been reading about in the press and some of the analysts, I think this is a really, really important discussion. So I thank you both. I wanted to ask you, Dylan, it's been my experience with some of these capital raises I've been part of that sometimes one runs into what I call sort of irrational exuberance among some of the investors, particularly when you go into the B and C series. And sometimes you don't get the level of due diligence that one might have anticipated. And I wonder, since you have a well-regarded reputation as doing your homework, doing the due diligence, can you sort of speak about your peers? Are you seeing improved due diligence among your counterparts? Thank you.
Yeah, it's a thoughtful question, Courtney. I would say in general, I'm disappointed with the level of diligence the industry is doing. And I think it really depends on what your time horizon is. So if you're an investor who doesn't intend to be in the deal, if I can use that term of phrase, in 5 years, then maybe you're less focused on the diligence. Maybe you're more focused on short-term technical risk, as an example. But if you're a long-term investor, if you imagine being in partnership with that company in 10 years, then I think you're going to be more thoughtful, and the type of diligence you do might be a bit deeper and a bit more systematic. But in general, I think diligence is not something, and by the way, that's not a space industry thing either. I think in general, diligence has gotten sloppy, but you typically see that in a bull market, and it gets sloppiest towards the end of a bull market. So it's probably not surprising, but I think in general, it could be a lot better.
Thank you. I think we have time for one more question, and then we'll have to wrap it up here. So I'll hand it over to Steve Brody.
Thank you. I appreciate both of the presenters. It's been a very enlightening and illuminating discussion. I wanted to ask for comments, especially from Jeff, but perhaps from Dylan as well, about the tendency that seems to be present to portray China's activities in the era of another space race. And some see that as a good thing, and I can understand that there is the motivation to embrace that paradigm to motivate political support and public spending. I've all my life, and as Jeff well knows, I've been more of a collaborative person and looking for international cooperation, and having sat down with some senior Chinese officials in my travels who have great respect for what the States did in the Apollo era and would wish to embrace more of a collaborative spirit. I wonder what they think about this tendency that seems to be out there to say we're in a space race and that's why we ought to be doing things, and how that might affect perhaps the dynamic that's out there in the world right now.
I'll grab it.
Space industry.
Hey, Steve, it's great to see you. I'll grab this, and I know we're at the time limit, so I'll be very brief. As space has matured, space exploration from the 60s on, we have three sectors. We have the strategic concern to DoD, we have the commercial, and we have the civil. I'm extremely concerned about where China is and the threat it poses to our infrastructure and indeed our way of life and the flow of information. That's one issue. It's not a Nanoracks issue. The civil and the commercial, I think there are reasons for cooperation. So I don't like us to see us have an evil monster that is the only reason why we get public funding. But China and others, there are others who do represent very strong threats to the United States. But having said that, in the past, again, with aviation or with any number of markets, you can cooperate in the civil, you can cooperate where it makes sense and don't lose IP in the commercial. And let's hope that builds services so we're all equally strong and protect our infrastructure, including space. So I'd like to see a greater sophistication that working with China to go to the moon might be very good if we peel off the IP and the sharing, but it doesn't mean we like what they're doing, let's just say, in the South China Sea. There's a strong difference and we have to be more mature in that. So that's my comment.
Thank you.
Thank you,
So
Jeff.
Rob, I think with that we need to wrap up the session. So if I
Okay, go ahead,
can,
Sally.
Thank you, Jeff and Dylan, so very much. That was an excellent dialogue. And I also want to thank Rob for moderating and Courtney for pulling these really great speakers together. We don't have a program identified yet for April, but I would ask that you check your website, the WSBR website. We will be announcing very shortly who our next speaker will be. So with that, I want to thank you all for participating today and I look forward to seeing you next month. Thank you.
Take care. Thank you.
Thank you.